Okay, good morning. We are coming up to a new hour, 5 minutes to go until 8 a.m. New York, and we've got CPI data at 8:30. We will have a couple of Fed speakers, a few Fed speakers, in fact. 8 a.m., sorry, 9 a.m. New York, 10 a.m. and 11 a.m. The Fed's page book at 2 p.m. and then crude oil stocks change at 10:30. So not doing anything on oil until after that data, 10:30 New York. We're waiting for the CPI data, waiting for the Wall Street open. My trading window is 10 a.m., between 10 a.m. and typically 12 p.m. New York. But we'll have a glance at what's going on across the board. These are my instruments that I prefer to trade. And I use the US dollar as a benchmark just to give me a feel for the direction of the dollar on the day. So if we look at this table here, bottom right, this is the Trend Predator Pro. This is my heat map, and what it enables me to do is glance at each instrument, and give me a bird's eye view of what's going on before I delve deeper into the chart, a chart of my preference. For instance, if there's a trade setup that's already been identified, I'd be interested in those, obviously. I'd be interested in anything really that isn't conflicting. So we've got the US 30, we have gold, um, W2I that's just trending, the S&P which is trending. And when I say conflicting, what I mean is the daily and weekly charts aligned, either bullish or bearish. So oil, as you can see, we've got the daily and weekly chart aligned. Breakout and fake out low, which is a bullish alignment. It's also backed up by the breakout on the monthly chart. But a confluence of the weekly and daily is good enough for me. And that is telling me that the market is trending within a month and is trending on the day and the week. Whereas over here with the NAS, we can see that today is an inside day. So we're inside of yesterday's range. Yesterday was a fake out high, as the table tells us. It pumped and then dropped back inside of the previous day. Okay, but the weekly chart is bullish, so that's conflicting. So it might be interesting later on, but at the moment not. Nevertheless, let's get into the market. So looking at the dollar first of all, we can see that we've got a bearish confluence. The daily chart is breaking down. The weekly chart gave a fake out high, both on this week compared to last week and last week compared to the previous week. So we'll have a look at that straight away. So if we just open up the panel, and what we can see here is the market split into days. So this is today, this is yesterday, this is the start of the week. As you can see, the start of the week. So we can see that Monday took out the highs of Friday, which is the high of the week, last week. That orange bracket is last week's range. We took out the highs and came back inside. So that's a fake out high, fake out high. This here is a continuation of that fake out high. So we had a first red day on Monday with the fake out high on the week. Tuesday was a continuation which broke down Monday's low, and today's broken down Tuesday's low. So all of this is looking rather bearish. We've got strong confluence in the daily and weekly chart. Also, the indicator tells us that we've got 3 weeks of higher highs and lows consecutive. So let's have a look at the chart in depth. What we'll do is, well, set it to the trend predator. Okay, this is my template, which looks at the market more in depth. So as you can see, I've split each week into a orange box. So the current week is as it is, down, breaking down below last week's highs, as well as the previous week's highs. But as you can see, we had this week breaking a new high, last week breaking the previous week's high, and the previous week breaking this inside week and the previous week's high. So an overextended market, in other words. So the sell-off was anticipated. We talked about that at the start of the week, and it's continuing so far. So we assume that it will continue unless we break back above yesterday's lows, Monday's lows, and the previous week's highs. So unless we get above this level here, essentially, oops, it's still in a bear trend, but a break above that level or area could result in a continuation to the upside, in line with the dominant trend on the monthly chart, which is breaking out. On the other hand, the monthly chart is also overextended. Let's go to a higher time frame. If we look on the monthly chart, we can see that we've been pumping since September, October, November, December, January. So it's also an overextended chart on the monthly. So a pullback is anticipated.